We're excited to have with us our friend, our namesake, and probably one of the most well-known and influential investors in North America, and that is Mr. Jay Taylor of Taylor Hard Money Advisors, where he's known for turning hard times into good times. For our listeners who are not familiar with Jay, check out his website, miningstocks.com, his blog on goldinvestor.com, and his newsletter. You'll also find his broadcast on Voice Over America. Jay's been an incredible investor, starting off as a commercial and investment banker for Citibank, for ING. In 1997, he resigned from ING and devoted himself full-time to researching mining and technology stocks. We're excited to have Jay with us and to introduce to you the watch list. What are your hopes for the watch list?
From my personal point of view, the watch list is very helpful, first of all, because it helps as a screening device or an information feeder for me, to the extent that Mark, you and Cal are able to sift through and provide a sort of a basic overview of companies that are seeking newsletter coverage. Then, of course, to the extent that you can sort of boil that down into a succinct report, it's very helpful to me. So from a selfish point of view, that's the first thing that I'm hopeful for. But in terms of what it can mean for investors, I think there's a couple of aspects. Number one is that same service that you're providing for me will be available to them, so that investors can go to the website and look at the same companies that I, Jay Taylor, am looking at as prospective recommendations, and get a succinct overview of the companies and what they're about, what their risks are, what their upside potential is, and then they can use that as a springboard for their own due diligence, who are looking to invest in the mining sector. Second thing I think it could provide for investors is an opportunity for accredited investors to invest in the private placement environment. And many times the private placements are priced at a level that are advantageous for investors who are committed longer term to the companies.
Is there some advice you could give an investor looking at a private placement?
I think first of all you look at the management. That's always first, whether it's a private placement or if you're buying something in the open market. But you have to look at the management and their track record, both in terms of technical capabilities. Do they have the ability to really make something work? You have to also then look at the ability for companies to raise capital. Can they do it efficiently or not? And many times these companies do not have all of the talents that are required to make things happen, raise the capital, and to move a project forward. And a third thing I would say to investors is they need to be aware of the timing in terms of when they're buying. If they're buying after the stocks are really hot and we've had a big run, that's when people really get excited about it, and that's when people can buy. My view is that you need to sort of look at it from a contrarian point of view and look for value in an investment, look at the management, and we've seen a lot of great opportunities earlier this year, and I think still at this point in time. They need to understand also when they're investing in the junior mining sector that things take time and they're not predictable. Even when a company has progressed to past the feasibility stage, there's still uncertainties in terms of timing and startup efficiency. Will the mine produce along the lines of the feasibility study? Very often there's quirks that need to be worked out before a mining project hits full strides. So these are all factors that people need to be aware of.
I see on your newsletter it's gold, mining stocks, energy, and technology. Do you do much in technology?
Our technology, Mark, is really limited to technology companies that reduce the cost of producing things you have to have. So like food, energy, water, natural resources is the orientation there too. But, if there's a technology that can increase the supply of water, for example, there was a company we followed that actually has a brilliant technology that reduces evaporation in a very environmentally friendly way for large reservoirs. Timing, again, is the important thing. Can you see a company and figure out what the best time is to get into it? Because you can invest in one of these companies many years ahead of time and sit with dead capital for a long time. On the other hand, you can watch what's going on, and there's my good friend Chen Lin, who's a brilliant investor and an associate of mine, who has really been very helpful to me. Chen sort of watches these things, and at the right moment, not years, but weeks or days before something is ready to take off, Chen is then a buyer. And we've been able to pass that information on to our subscribers to a great extent as well. Investors need to be aware of what the risks are. There are a lot of risks, but that's where the returns come from. I mean, you don't get these fabulous returns. I mean, we've had stocks that have gone up 30, 40 times. We didn't know when we recommended them that they were going to be a 30 or 40-fold gainer, but we knew they had that potential. We also knew that there was a good chance that they weren't going to go anywhere, because that's just the nature of the business. But you need to be aware of the risks and then know how if you're capable of tying up your money for a while, if you're willing to do it, or if it's necessary to do it.
Well, Jay, as we wrap up, let me thank you very much for this.
All right, Mark. Well, thanks, and keep working together here on this.
Oh, looking forward to it very much.